Hey everybody, it's Henry Steele. Today is August 31st, 2022, and this is the fifth and final video for a series of 5 videos that I've done here in the month of August 2022 about using lines on the chart to help you anticipate changes in trend, or potential changes in trend is what I should really say. So if we look here, this is the United States dollar, Canadian dollar cross pair, and this is the daily chart. Now with this method, we're going to put several horizontal lines on the chart, and you'll notice that they're at even price increments, $1.22, $1.23, $1.24, so on, all the way up to $1.28. That means that there's 100 pips between each line right here. Okay, there's nothing special about these particular price levels other than the fact that they're even numbers and they're what's actually involved with the price. In other words, the market's moving over these price levels at this point in time, which is basically the second half of 2021 is what I'm looking at right now. So with this methodology, it's pretty easy. You look for a top or a bottom. We're going to start with this top right here. You look for a top or a bottom, then you wait for the opposite. So we have a top here, so we're going to wait for a bottom. We get a little bottom here, moves up, but then it moves down and breaks below it. Here we make a bottom, then we start moving up, and by somewhere around here we realize this was a pretty significant bottom. So we're going to mark this on the chart with a vertical line so that we have this line crossing the horizontal lines, which creates nodal points. A node is where two or more lines cross each other. So what we're going to do is take the ray tool to create an angle from this top, and we're going to make it cross through this node right here, where this point in time and this price level are balanced or equal. And what we're going to look for is what happens with the market when this line gets to the next price level, and we create a node with that. We see here we get a bit of a retracement when this one happens. Again, over here we're in a retracement right there. When it crosses this one right here, we're at a top here, and we move down and then start moving sideways significantly. When we cross over this one right here, we're just a day away from this bottom right here. So this one's kind of a failure. Then this one right here, we're moving sideways. We popped up a couple days and then start moving sideways again. So we have okay results with this. We're getting retracements right here, but if we drag our angle down a little bit so it becomes a bit of a sharper angle, and we have it cross over this node right here, come on, there we go. When we cross over these lines here, we see that we're getting retracement again here, retracement right there. We're about a day away from this bottom right here, but it's a nicer move right there. With this one, we're in the middle of a retracement, and with this one, we're coming out of a sideways move there and move down. Or you could consider it a failure, because if you consider this a top and then the move down, it's right smack dab in the middle of it, which is where most failures happen, incidentally, at the midpoint of a trend. So we have an interesting method to possibly forecast future points where there might be a change in trend. And I think I've shown this method before in a different video several years back. But there's also another way that we can use this. So let's go back up here to this node right there. And what we're going to do is measure from this particular top, and we're going to see how long it takes for the market, since it's moved away from it, to move back and touch this line. And then we're going to double that with the assumption that that's probably an important amount of time. So here we have a top. We saw that there was a bottom right here. The market starts to move up. We identify this as a pretty significant bottom so that we can use this top and put this line in here to create this node point right here. So we do that, and then we wait, and then the market eventually comes back and touches this line. So now we're going to measure from here all the way here, and we see that it's 46 candles, 46 bars. So we're going to double that to 92. And when we double it, we find that we're at this point in time right here. And the market had come off this bottom, moved up, made a top, moved down just in that day and a half essentially, and then moved back up. So we did get a change in trend right there. If we move down to this line, we see that the angle obviously is a bit more severe. It's a sharper angle, and as a result, it takes less time for the market to get back up to it. So we have a different amount of time. And we can measure that. We see that we have 38 bars, so we're looking at what, 76 right here. And we get this point in time right here, so essentially we move down, move back up, and then come back down. So we're kind of getting the same thing. We're smack dab in the middle of a bigger trend here, right? So now let's drag it down and cross this node right here. And then the market touches again right there. So we measure an even shorter period of time. And right here we see that we have 33 bars, 33 candles. So we double that to 66, and we find that we're at the big top right there, and then we move down significantly. Now let's try it with one more change in the angle so that there we go. And this guy is the first one to touch it. So once again, we have an even shorter period of time right now. That's 27, so we double that to what, 54 days. And we find that we're at the top right here before we move down for a few days. Significant move in price, just a few days that it took to actually do it. So what we're looking at here is that when we, how should I say this? The more shallow the angle is, the less likely it seems to get an important change in trend when we use the doubling. The steeper the angle is, the more it seems to actually be giving us more important changes of trend. But what you might find with this method, after you test it out with multiple instances in whatever market it is you're trying to evaluate, you might find that there's a pattern where there's a certain amount of price movement that gives you the best results. In this case, we got to this particular top right here when we used this node right here, which this is 100, 200, almost 300 pips above that. So there might be something to using 300 pips, or the closest you can get to 300 pips with these even numbers. So it would be a good idea to look out for patterns of that nature also. Let's go ahead and try one more. This time we're going to come from a bottom as opposed to a top, and we'll use this slightly less significant bottom right here. I was thinking about using this one, but let's use this one right here. We have a top that happens right around here, not right around here, right here exactly. And then we have our bottom right here. So if we create our angle with this first line right there like that, we have possible changes in trend when it crosses over these lines like I indicated in the beginning of the video, but we also have the amount of time it takes for the market to come back and touch that. So we're going to measure from here to here, which is 29, so we double that to 58, and we see that we get a bit of a top right here. It's not the exact top, but we're pretty close. If we change our angle so it's significantly more sharp, I guess we could say, we see that we get a much more reduced amount of time before the market comes back and touches it, and we measure that 10 bars, so we just double that to 20 bars, or candles rather, and we're at a small short-term move down there, and we move back up, all in this basically sideways consolidation area. So the point of this video is to show you not really the first method, but the second method, because the first method I have shown before in a previous video. I don't remember how long ago, it's been a while. But the second method here, where we double the amount of time it takes for the market to come back and touch that angle, can be very, very powerful tool to use. Obviously, you're going to want to test it out in your market and in your time frame. So hopefully you found this method interesting. Hopefully it's helpful to you in some form or fashion, and I'll talk to you in the next video.